Invest with KM Capital Appreciation. Today I'll be sharing with you the results that were shared last week from the company, and I'll be highlighting why I continue to say this is a good company to invest in. Number one, it's because it's trusted by blue chip clients from the banks, Standard Bank, Capitec, Absa, FNB. They are the clients of this company, Capital Appreciation. Number two, the retail clients from ShopRite, Pick n Pay, and Woolworths. They are the clients of Capital Appreciation, and also other companies like Sasol, Howler, which sells tickets. They are the clients of this company. So these guys will continue to be there in years to come. And if they are there and if they are satisfied about the services that they are getting from this company, Capital Appreciation, then it means that revenue will keep on trickling in. It will continue coming in numbers. Okay. Now they increased revenue and it passed that 1 billion rand mark in 2024, which means their sales, it passed that 1 billion rand mark. And this is important because this is the money that they needed when they started way back in 2015. They needed 1 billion rand to list on the JSE to give birth to this company, which is Capital Appreciation. So these guys, they've been increasing their market share over time. Market share meaning like a pizza example. Let me give you a pizza example. You know, when you go to Diponese, you buy the real deal, which is the smallest pizza that you can get. And then from 2015, they had the real deal after raising 1 billion rands. And then they used that 1 billion rand to make the real deal, and then they sold it, and then the customers paid, and then they got proceeds back over the years. And then they started doing what? The medium pizza. And then they sold the medium pizza, and then up until they sold it, and then they got the large pizza, and then now they are doing the triple decker. So which means now they are passing that 1 billion rand revenue a year, which is the money that they needed to start the company, but now they are surpassing it easily. So what does this tell us about the management? It tells us that this management, this leadership, it has a track record of growing revenue over time, of growing capital over time, of growing their territory over time. It tells you that these guys, they are the ones that you can trust. And why do I say that as well? These guys, remember in our previous videos, we showed you that these guys are former CEOs of big companies in South Africa. They are former CEOs of McTeel, from the CEO, the joint CEOs, the Bradley Sachs and his joint CEO, and even the CFO, Chief Financial Officer. He also held a CEO position in one of the big companies in South Africa. And all of this information, you can check it out on Capital Appreciation website. It's there. So now, their net asset value for each share, it's worth 125 cents. And from that 125 cents, each share, they have cash in the bank account, which equates to 37 cents a share. That's just cash laying around waiting for them to invest it in other companies, whether they're buying it or maybe they are buying a stake. Whether they're buying the whole company or they're buying a stake in that company, or paying it back in dividends, which they have done for the previous 7 years. They've paid dividends and they've continued to increase dividends each year. However, they are increasing dividends, but that doesn't mean now it's their policy. It's not their policy. They have just seen that we have excess cash. And then what can we do with this excess cash? Now they decide to share it with us investors. Remember, one share right now, at the time of writing of Capital Appreciation, it's 118 cents, which I checked today. And if you had bought the shares in 2015, you would have bought a single share for 1 rand. So now they are paying back the dividends, and then they are also investing in other companies, which is growing their pizza size. And then they are also buying back their own shares, because previous year management bought 44 million shares of their own shares from Capital Appreciation at an average price of R1.30. So these guys were buying, the management, they were buying shares in this company for R1.30 a share on average, which is now they are reducing the supply of the shares so that they can increase the demand. And if they're increasing the demand, the price will eventually go up. So these guys are planning to continue to buy their own shares because they see that the share is undervalued, which is why I'm sharing this information with you guys, so that let's invest in this company, because I believe, from the way I see things, that this company is going places. It's the next Capitec, which I mentioned in my previous video, that this is the next Capitec, in my view. This company is going places. They are increasing the pizza size, the market share. They are buying back their own shares. They are paying investors to keep invested in them, which is now this year, just this year, 2023-2024, they paid back dividends of 10 cents in each share. And if you had bought this share, Capital Appreciation, the time I suggested, you would have bought it for R1.20. It's more or less in the same price range even now. And if you're getting 10 cents back, it means you would have bought it for like R1.10. And I continue to buy and hold this share every month. It's my debit order. It's what I do. I just buy and hold, because I know that it's doing good things. I'm keeping updated with this share, and then it's paying me. In the next 10 years, I don't know where it will be. Maybe it will be worth more, like 10 rands or something. Then we can start smiling, like really, really, really smiling. Yeah. So the management is also focused on creating value for shareholders, which is they create value by buying more businesses so that they can continue with their mission of being a fintech company. Anything that has to do with payments, whether you are swiping or you are tapping your card or you are buying online, they are there. They are assisting with those services. Even Capitec, remember Capitec approached Capital Appreciation to help them design their website so that their website becomes more user-friendly. And if it's more user-friendly, it means Capitec clients will continue using the website because it's user-friendly, it's easier to do, and they can do it from the comfort of their own home or work. So big banks like that, they approach Capital Appreciation. Remember, I shared more of this information in my previous videos. So now, in terms of clients from banks, all the banks, they are part of the Capital Appreciation clients. So meaning they are satisfied, because these guys, remember, the banks, they have options. So if they are not satisfied with your services, they won't stick around. But these guys are sticking around. Standard Bank, it was the first major client of Capital Appreciation way back in 2017. And they continue to be the client of Capital Appreciation. It means one thing only. They are satisfied with the service from Capital Appreciation, and they feel like they can afford this service. It's at a reasonable price. So that means one thing, for us investors, it means revenue, and revenue means profit for us, because if a person continues to buy from you over the years, it means it trickles down to the profit, to the bottom line, which is profit. And then when they have more profit, it means our share price, it will go up in value, or they will continue to give us dividends, because since listing they have paid more than 44%, which is 44 cents what they've paid since from listing, and they listed at 1 rand a single share, but now in dividends only they've paid back more than 44 cents, 44.5 cents in a single share, and their share price has increased from 1 rand when they listed. Today I checked it, it was like 1 rand 18 cents at the time when I was writing this episode. So meaning 44% plus 18%, it's more than 60% return in this company in a single share in 10 years, in like 9 years, because the 10th year it's next year. So can you imagine what they will do the next following 10 years? And all of this information, guys, remember, it is easily available from the website. Just go to Google, type in capital appreciation, and then go to their website, check the management, check the dividends, check how much they have performed, which companies they have acquired since listing in 2015, which they raised 1 billion, but now they've surpassed that 1 billion rands. So everything is right there. So today I'm just sharing my perspective as KM, because this is an Invest with KM channel. Yeah. So capital appreciation's way to 1 billion rand revenue. The payment division, it contributed 43%, which was 562 million, through African Resonance, Dashpay, Glass, and Layup. And then the software division, it contributed 47% through Synthesis, Responsive, HaloDot, Dariel, and Asset Pool. And then international, remember, international is very important. They contributed 10% through Synthesis, Regal, and HaloDot. You can see there's a star sign between next to Regal, Asset Pool, and Layup. That means these companies are subsidiaries of capital appreciation, meaning capital appreciation has invested in these companies, but they don't control the whole company. And then the rest of them, they control like the whole company. So I was saying international is very important, because remember, the risk of a fintech company in South Africa is because there can be more competition. If people see that like you are making more money, obviously they won't just sit around there and wait for you to make more money and get rich alone. They will compete with you. So now to mitigate the risks, they've started to growing their company abroad, which they have an office in Netherlands, which is setting up to conquer Europe, to start providing these products and services of capital appreciation in Europe. That's why I'm saying international, it's important. And also because the economic conditions, remember this is a South African company, and the economic conditions of our country, South Africa, right now, they are not looking very good, because there is political instability, and then people are being laid off, because when there is political instability, like jobs are not being created, people are not transacting more. So now these guys saw that, okay, there is political instability, there is country risk in South Africa. They started to grow their company and their brand overseas, which now is contributing 10% of their overall 1 billion rand in revenue. And it will continue to grow from there. It will continue to grow, which means they are diversifying their risk, not to be focused in one country. If you need more information about all of this, check out my previous videos. And yeah, that is it for today. Please check out this visual. It's someone pulling up the lady in red in the red jacket, they are pulling them up. So I need you guys to help me to pull me up to reach 100 subscribers. Please like, share, subscribe, and tell me what you think about Capital Appreciation. Have you bought the shares? Have you done your own due diligence? Have you done your own research about the company? Tell me in the comment section below. And also, please check me out on YouTube, Invest with KM, and like, share, and subscribe. Tell me your thoughts about this company, guys. Please. Thank you.